This has been kind of an exciting topic. A lot of people have talked about making 30 pips a day or 50 pips a day, and we're going to talk about doing that and using time frames to actually take you less time to find those trades, how to break it down so you can make those pips. Now, where we come up with the 30 to 50 pips, these are what the students are telling us that they're looking for. Many students have started out, I'm going to make 10 pips a day, and they move it up, pretty soon they get 30 pips a day. Well, 30 pips a day is a pretty reasonable success ratio, 30 to 50, and sometimes they even get to more than 50 on average once the students get used to doing this. Now, it's what you need to do is set the goals. And here, those are suggested goal range targets to get to. In setting the goals, if you break it down and take 30 to 50 pips a day, that's weekly, that's 150 to 250 pips a week. Or monthly, that's 600 to 1,000 pips a month. So you can see how just doing a little bit consistently each day can add up to be some pretty good pips. Now, over the years, we've heard many professional traders really get excited about making 600 pips a month. And so right there is the goal, to be equivalent to what some professional traders are actually doing. Okay, so what do you need to do here? First of all, pick a strategy that works for you. Now, not necessarily a trading course, because that's what you have if you like our material, but pick a strategy within our trading course. And I'm going to show you a couple little things that can maybe fine-tune a strategy that you might be working with. But it's got to be something that you feel comfortable with and you could do on a regular basis. Now, then once you get that strategy, do the same thing in every trade. Don't change it. If you say you're going to take a trade based on this signal setup, take a trade. Whether it's 100% or not, take a trade. Now, the only thing that would keep you from taking more trades is you just don't have enough resources to take 15 or 20 trades that you might be able to see, but you can take 3, 4, or 5 trades based on what your strategy happens to be. Only make small changes to your trading plan. So first of all, I suggest you need a trading plan, and then take a sequence of about 20 trades. You're doing that same thing on each trade. Then you say, how did it work? Do your numbers. My win-loss ratio. Am I only winning 40% of the time, or am I winning maybe 60, 70% of the time? So once you know those numbers, then you say, oh, okay, I can see that I'm doing this little thing wrong every time, and if I just change that one little thing, then I can take another 20 trades, and that way then you can find out where your strengths, weaknesses are, and what's going to work for you. But then you have to keep records. That's a part that a lot of people don't do. So I'm going to show you a thing. You've probably all heard about it, or you should have if you have any of our course material. It's called the Trade Tracker. Here's a copy of it, or example of it. It's when you do entry signals, mark a little mark down as to why you took the trade. Now, if you have some other things that you can put in here, that's fine. The main thing is trying to figure out what your strengths are and what your weaknesses are. If you enter too soon all the time, well, maybe you ought to just wait just a little bit. Entered late, maybe you ought to enter a little bit sooner. Did you let the trade come to you? So there's negatives and positives here as what you would do as far as entering. Do the same thing on the exits. Once you get 20 hash marks on this sheet, you kind of have, that's a record keeping right there. You're seeing what you're doing. Now you can keep more detailed record, but this is the bare minimum into what you would want to do, so you can figure out where you're going. Then do another 20 trades. Do this over and over. Pretty soon you'll have your trading style perfected. Now, a watch list. Let the trades come to you. And this is where we use the trade grader. Now, we're going to go into some of this as we go through the webinar to use these tools that we just talked about, setting goals, letting the trades come to you, and grading them so you're only taking high probability trades. Okay, we're going to use 3 time frames. You can pick 3 time frames that work for you. I wouldn't go anything less than the 1 hour, 30, and 15. You can use the day, 4 hour, 1 hour, 4 hour, 1 hour, 30 minute, or the 1 hour, 30, 15. I would only use those 3 groupings. If you start getting smaller than that, it's just way too much noise. If you get bigger than that, you may not have the patience to handle it at this point. So start off with one of these 3 groupings. I'm going to start with a 4 hour, 1 hour, 30 minute. Okay, now you can see right here we have a Norwood alert. But you can do this without even having the Norwood alert. But the thing I want to share with you, this is just a jump start setup. So we're just going to use that. Use the same thing if you're using nth degree or Launchpad. Use the same concept. Here's one thing you can look at in every one of these courses is right here. Where did the Mayo cross the zero line? And at that same point, were the hot lines pointing in that same direction, pointing down, or right here when it crossed back up, were they pointing up? So those would be some areas you can start looking for trades. Now this is very similar to what you already know about, but here's where the watch list comes in. That says watch list. Okay, it just crossed. Put that on my watch list. Put the US Swiss on your watch list. Then let's grade it out. The trade grader. How did it grade? Okay, we're looking for sell trades. This said yes, it was going down most of this time. Now let's go to the 30 minutes, see what that would have said. 30 minute did not grade out because the Mayo was above the zero line. So let's go here on this 30 minute and mark. That's the first point that the 30 minutes said yes, let's take a short trade. Let's see what the 1 hour looked like at that spot. The 1 hour said that looked pretty good. So it was giving you the signal the same way. And of course we know the 4 hour said okay right here, but it really confirmed it right there. So watch list, how does this work? You look for a larger time frame that says a signal going a certain direction. You confirm it on the next time frame. Once those two time frames are confirmed, then you can go to the smaller time frame and look. Or you can find on the larger time frame, go to the smaller time frame, and when it tells you it's ready to take it, you then can go back and confirm it on the middle time frame. So that's how you create a watch list. Now the thing with this, if you do not have the alerts, you have to check it every 30 minutes. Well, sometimes you can't do that because you're not around, but even if the alert went off, if you're not around, you can't check it. The alerts allow you to trade more currency pairs at one given time rather than only one or two. So you see how that works? I'm not going to go through simulated trading. I'm just going to show you how to create a watch list using the signals that we talked about. Okay, see these lines we drew on the last group? They don't necessarily apply to this group or to this currency pair. Right there. This went across the zero line, and it may have gone across it in the beginning of that formation or maybe a little bit later. It doesn't make a difference. Sometime along that line, when you see that go across, you say, okay, now I'm going to start looking for long trades. What do we do next? We go confirm on the 1 hour and see if that's ready to go. Well, the 1 hour said yes, it's ready to go because it's on the right side of the line, but there's off points. Let's see if the 30 minute even actually would even give us a go ahead on that. The 30 minute said no, it's below the zero line. So you would not have even been wanting to take a trade there. So we can either wait on the 30 minute and then go back and confirm on the 1 hour. See, the 1 hour, almost, it wasn't quite there. Say you had waited until this 1 hour was ready. Right there is when it became ready, about right in that time frame. Let's go see what the 30 minute looks like. Okay, 30 minutes said yes, it's ready, but then it went sideways. You see right here when this 1 hour confirmed, the 1 hour confirmed right here, but the 30 minute was starting to go sideways. So it's this next fresh signal that said that was the best place. If you had taken a trade right here, you would have been okay. It only went maximum against you about less than 10 pips, and then the trade took off. So it's what I'm trying to get you to look here is you have to time it and get used to seeing things that are not set up perfect and say, I don't necessarily agree with that. I don't like that. It's not strong enough. When these hot lines start changing directions, you say that's kind of weakening. You get into Launchpad and nth degree, you can see that they're going to be able to give you a little more accuracy, a little more possibility of grading it out to a 5-alarm trade rather than just a entry based on the jump start, which is the fresh cross. Fresh is better, but a cross above the zero line, and it's fresh in that the hot lines hit at about the same time. So this probably crossed above because it was already above, but the hot lines were not ready. So at that line or just a little bit above was where you actually got the signal to get in. Now, would this be a watch list candidate as you're going through things? Right over here, that crossed? Yes. Every 4 hours you check your currency pairs. And if you see any that are getting close and or that have just crossed, that's on your watch list. Then confirm it going down. So that's how you create a watch list. Let's do another one. I think this was one that I was looking at earlier. Okay, we're on this 4 hour. Now the 4 hour said, let's do something clear over here. So I'm going to move this line over here. So this is where it first crossed. Okay, here's another thing that you need to keep in mind. You notice that it didn't go below until right over here. Once it goes below, then you don't have the Mayo and the hot lines both going the same direction. So right in here you wouldn't have been trading. But the key that makes it fresh is when the hot lines cross again, go in the right direction, and the Mayo stays above the zero line. So right on this point, it's not ready to go. So I'm going to put a line there because we know that it'll grade out here shortly. So let's take a look at this first one that we had set up here. Move the anchor over there. The 1 hour. We're going to see if that grades out. See, the 1 hour doesn't grade out right. Let's see what the 30-minute does. 30-minute doesn't grade out right either. So we can do one of two things. You can look to wait until the 30-minute grades out right, then confirm it on the 1 hour. See, the 1 hour still didn't confirm it. So then you say you want to do on the 1 hour. Now let's go to the 30-minute. We know that the 30 minutes ready to go. What if you're taking a trade right in here? It went 35, well, 30 plus pips in your direction totally, but it did come back a little bit almost to your entry point. So at most you would have been down about 10 pips on that particular one. But is that a high probability trade? Yes, I think so, because everything was lining up. Now when it gives you signals to get out, and look at your exit signals on your course material, get out. So if we got in right in this area, we would have been getting out after about 10 pips. Even though it went 30 pips, you might have gotten 10 pips out of that. But that was a good safe trade. Are we going to be trading this portion right here? I would say no. So what you're trying to do is trade in the direction of this. You see that the 4 hour went up, came back down, started going back up. There's another section here. If we put a line on that, we know that that's okay there, but let's see what the 1 hour said right there. 1 hour said that was okay at that spot, and the 30-minute waited a 30-minute. That might have been a news announcement. You may have missed that one. It looks like it was a gap. So that may have been either next to a weekend when it hit right there, or it was a news announcement that made it. No, it didn't gap. I can see a black line inside there. So we just started and went up. So if you had been there, you may have gotten that one. I probably would have missed that one because I usually am not there right when the news goes off. I'll bet you that went up mostly, and within 5 to 15 minutes it went up. So that one you may have missed. Okay, you wait for it to set up again. Once this crosses, now we're on this last vertical line. So we go to the 1 hour. Okay, this is where the 4 hour went off. Did the 1 hour say yes? Yeah, it agreed. It's someplace along there it agreed with that. Let's see if the 30-minute actually agreed with it. 30-minute actually agreed with that also. Is it sideways? Yes. Would you have taken it? Maybe. That's what you have to decide. Do the same thing every time. Whether you take those, take this one. If you don't take them, don't take this one. Because going sideways, you know that there's a great chance that it's going to do just what it did here, 20 some odd pip drawdown. But this is where, right on this bar or this bar, you can see that was the place that it took off, or even right there. One of those 3 bars would have given you heads up to get into that trade. So I'm just going to put on the middle of those 3 bars. Go back and look at the 1 hour. 1 hour said yes, that was okay. And of course we know the 4 hour, that's where it took off. The total trade based on a 4 hour was like 150 pips. What would we have taken on the 1 hour? Someplace right in here. That's about 150 pips as well. Let's see, did the 30-minute give us good easy? Well, it was easy for a while, about 80 pips. Then the other half of that trade, you would have just use your skills as to whether you would want to take that trade or not. So does that make sense to everyone? Well, first of all, we talked about setting goals. Now, take if a goal for 10 pips a day is all that you can handle, great. As long as you consistently can make 10 pips. Raise that once you've done that for a few trades. Then set it up, get up to between 30 and 50 pips is where you want to shoot for, so you feel comfortable making that many pips all the time. Then you want to be consistent, pick a strategy that works for you, and use the time frames. You decide on the time frames. If you're working a full-time job, it's not necessarily better to go to smaller time frames, saying, oh, I can spend 2 hours in front of the computer each night. It might be better to use the larger time frame, the 4-hour, 1 hour and 30 minute. You're still going to spend the same 2 hours, but you're not going to be sitting in front of the computer. You'll actually make as many or more pips, and it'll be easier to learn if you bounce to the larger time frame instead of trying to just get into the smaller time frames. Because of these two lines, I know that was a weekend, so towards the end of the trading week, you might have closed your trades, even though shortly thereafter it did give you signals to get out of that trade. That's pretty much what I wanted to cover today, is setting goals, being consistent, using the time frames to create watch list. And part of what I talked about is in the email, so you can start using this right away. Okay, in another, what about 40 minutes, we're going to have another 4-hour bar form. So go through your charts, find the 4-hour bars that are set up or are about ready to set up. That's starting to create your watch list. So you can start creating a watch list right away. And then grade it down. We just showed you how to grade based on a jump start when it crosses the zero line. All of the 3 time frames have to be crossing in the same direction above or below that zero line, all in the same direction. That's how you can start using this strategy right away. John asked a question, once you've made your 30 to 50 pips, do you stop trading for the rest of that day? That's a personal choice. Some people say, I've made my goal, I'm stopping trading. Mine is, if I've made the goal and things don't look really that great, nothing's setting up, and I've got a personal schedule that's busy, I'll quit trading. But if I've made the 30 pips and it looks like the market's still going, I may stay in, but protect it with profits, a trailing stop, something that would maybe lock in that 30 pips so you never make any less than a 30, but you could make 50 or 60 or 70 pips that day if the market moves real well. So that's a good question. Do you stop? Maybe. Do you keep on going? Maybe. It depends on the day and the situation and how the market's moving. I don't get concerned if the 2 larger time frames are headed and marked graded right, going in the right direction. Then the 30-minute, I will take a trade on as soon as the thing crosses the zero line. Now, it may not cross, like on this one may have started, or this one, it may not have been above when it first took off. But when it does cross finally, that's when I would then start taking the trade. It could be halfway through it, it could be early on. But I don't worry about that if the 2 larger time frames are going in the right direction, because I know the drawdown will be small. There's one question I saw in here about how much of a drawdown to expect. That's another thing. In your trading plan, that's not the thing we're going to be discussing in detail here. Pick where you want to put your stops. They could be based on swing lows, swing highs as a point of reference. They could be based on a certain number of pips. And you decide how you want to set your stops. That's something you're going to have to decide. I could come up with 3 or 4 different ways, and they don't work. None of those ways work every time. Sometimes they work really great, other times they don't. So you have to kind of get the art of knowing where to put your stops. That's where you do your 20 trades, setting that stop the same way every time. Then you can decide how you want to use that stop. Do I set it out X number of pips? Every time, no matter what, I set it at X number of pips. Or do I always set it at the nearest swing high or swing low? But do the same thing every time for 20 trades and see if that works for you. If it doesn't, then make a slight adjustment in that area. Okay, there's someone that asked a question about what are these indicators. If you log into the Jumpstart trading material, we show you how to set these indicators. There's only 3 indicators on here. 2 moving averages, which I consider one indicator, and a moving average of oscillator. I'm going to tell you what they are, but go to find if you don't understand what I'm talking about. The green line. The yellow line is a 3 shift 0 simple at the close. The purple line is 5 shift 1 simple at the close. This is the moving average of oscillator, is the bottom indicator. We do not change the setting, we just do the default setting on that one. But you go to the Jumpstart and see how that's set up, and actually see material very similar to what we've discussed here today, not quite as in depth. But go to the Jumpstart. If you like that, then maybe you want to move into Launchpad or Nth Degree.
Is this what you normally focus on, Kirk, is the 4 hour, the 1 hour, and 30 minute?
Yes, that's my personal preference. I know there's some successful traders that use the week, the day, the 4 hour as their time frames. But for me, the 4 hour, 1 hour, and 30 minute is what I like to use
for day trading. However, you have mentioned many times in many webinars, don't trade opposite the direction of the day bar.
Yes, that's the other thing. You decide whether that's going to be your larger time frame. Many times I'll not worry about the day bar. I'll just start grading it based on the 4 hour, 1 hour, and 30 minute. So there's some art here. I mean, I can give you all kind of science and say exactly do this exactly, and it doesn't work for you. That's where you take the 20 trades and adjust it to fit what you're doing. I can be just as successful using the 4, 1, and 30 minute is trying to figure out what the day bar is doing, because sometimes the day bar takes 12 hours before it sets up right, and I missed 30 pips out of a 50 pip trade because I waited for the day bar to set up right. So I just use the 4, 1, and 30 minute. That's why you take 20 trades, then adjust it. Take 20 trades using the day bar. If it works for you, great. If it doesn't, maybe you adjust it. Take 20 trades using the 4 hours or larger. That's why we suggested the 20 trades, is to find out what you feel comfortable with. Good questions, guys.
Yeah, they are. Steve asked a very relevant question that you might want to elaborate on. In terms of the freshness factor, he asks, how fresh does the male crossover have to be in the larger time frames? Is it okay if the 1 hour, for example, cross was 3 or 4 bars ago?
Usually, say the 4 hour just crossed, and maybe it's flickering back and forth as far as being 0 or above. Once you feel comfortable that it's okay on the 4 hour, you can go to the 1 hour. And many times the 1 hour will be ready. Sometimes it's not ready either. And then go to the 30 minute, and that's where you're grading the trade. If the 4 hour is just getting so where it's just crossing the male, okay, that's great. Many times the 1 hour will be 1 or 2 bars already crossed that confirm that, okay, now we've got 2 things that are looking good. Then you can time it on the 30 minute. Right here on this 4 hour, it was fresh, said down, but you can see what it did after the fact. Assume you don't know what's going on. You would just look at this 1 bar, then off to the left is all you see. So when you go to the 1 hour, see, that's all you see is off to the left. Did it grade out okay? Yes, because what are we doing? Well, the 4 hour said going short, the 1 hour said going short. But look, you can see that hot line is right up there touching. You can see it's not spread apart like the other before. It's kind of going sideways. So you look at the 30 minute. Okay, was that fresh? Going long? Yes, but what we were taking? We were taking short signals. Okay, right here would be a fresh signal. What if you'd taken that? It didn't go back against you more than 5 pips, but you had a long ride till it actually took off. I would actually, if I was there and saw it, I would take this one also. See, it crossed below that line right there. When it got about halfway down, I could see that the hot lines are moving pretty good, meaning the hot lines are the moving averages. They're pointing down. That one would have been one that I would have taken when it crossed right below that.
Mm-hmm.
So I don't always wait for the 30-minute to be fresh with that fresh cross. Now let's go back and look at that. We'll put a mark right there. Let's go back and see what the 4-hour did. 4-hour, it already said, yes, it's going pretty good. It had moved down here, and now it crossed below that. We also saw that it was moving down. What did the 1 hour do? 1 hour already had a signal up here. It crossed below the previous bar. So on the 1 hour and the 30-minute, that still would have been a good place to take it. So that's where you need to practice to see whether you take it. Sometimes the early and first entry is the best. Sometimes it's good, as well as the second one can be good. There might be a hesitation in the trend. Okay, right in here. There's a 4-hour trend going up. We know that we would have been able to see all kinds of signals right there, but there was a new signal right there. Let's take a look at this one, see if it would have done anything different based on the 1 hour. The 1 hour wasn't reading properly there, but it started reading right there. Let's go to the 30-minute. 30-minute said yes right before, so I would take it because the other two were going, even though 30-minute was fresh one time frame before. Would I take that one? Probably. And would I take this one? This one wasn't a cross, but this one was. I would take that one. Well, it was a fresh cross also. Here's one that you might want to look at. Okay, right here, this was the fresh bar right here, but this was the better trade. Came down, retraced. This was not fresh at all. Is that a good trade? Yes. Based on 30-minute time, it only moved 14 pips, but the point is, it was a fresh trade. Now this one becomes, it was a good trade. It was not fresh. This is fresh once again. So you can see that many times the fresh trades are better, but they're not the only ones you can take to have some good pips. Michael is going to probably have a high success rate because he's very cautious in what he just said. He's waiting for the first signal, not taking those that come just a little bit later.
On the smallest time frame, this cycles quite rapidly, and it's easy to wait for the next occurrence of the male moving up and down and then back up. I just use the normal alert to notify me when it's time. Boom. Go and do it. Look at it, evaluate it. If I want it, I'll take it. If not, I'll wait for the next one.
And that's good. So there's more than one currency pair. Yes, we've been looking at this particular one, or only 2 or 3. And yes, you can take those trades, but what if you let the tools work for you and only take those in your rules that said fresh, Norwood alert, which would be the fresh cross here with some other confirmations to get that Norwood alert.
Right. Otherwise, you get stuck trading one or 2 or 3 currency pairs rather than trading the indicators. Is there a specific time that you'd like to trade or a specific session?
I would like to trade all the sessions, but I miss the European because I can't stay awake during that and the rest of the day. So use the U.S. session because that's when I'm waking up. If my schedule's not booked in the evening, I like the Asian session also. If something's like we're just barely, not barely, we're only maybe 25 minutes away from the Asian session. So if you see something taking off during the Asian session, I like that one too. So I like trading the main major sessions if I'm awake. That's what I look for. Am I awake? Is it fitting into my schedule? I know there's a lot of people in different parts of the world that the European session and the U.S. session are their best time frames. Others, the U.S. session and the Asian. Others, the Asian and the European session. So fit the 1 or 2 sessions that most closely fit your ability to fit into your schedule, and then that's where you ought to trade. Don't go back and say, oh, I wish I could trade this because if I did that, I missed all these pips. If you look at it, there's plenty of pips in the others as well. So just figure out what your schedule is for your lifestyle, your workload, your family life, and trade around that. And there's generally going to be some trades on a regular basis in one of the 25 plus currency pairs that your broker might offer.
Here's a great question. Mohammed asks, if the daily goal is 50 pips, would you recommend taking 5 trades of 10 pips or each or 2 trades of 25 pips?
I don't worry about it. I just take all the trades that I see and close them out when the exit says to exit. And so I'm not saying, oh, well, I've got 10 pips. Okay, it's 10 pips. I've got 3 trades of 10 pips. I'm going to get out. Boom. Well, what if it had gone 30 pips? You could have had half your done on that one, half your goal in one trade, or you could have the whole 50 in one trade. That's where you can actually get more than 50 if you let the trade move as far as it will move. Take as many trades during your trading time frame as you can, and close them out and manage them properly, and you'll find out what your daily goal could be. Your daily goal might be 37 pips. Your daily goal might be 78 pips, because that's what you can normally get based on your trading time and the style and the way you're doing things. So set your goal based on what's happening. Well, what if you don't hit the goal one day? Don't worry about it. Don't try and make up for it. Just say, okay, my goal is still 30 or 35 pips, and I only got 27. I'm not going to worry about trying to get the other 2 pips and lose 15 because I tried to get 2 more. If the trades are not set up, don't worry about it. If you only got 15 pips one day, then the next day, just shoot for whatever your goal was. If it was 30 or 35, just shoot for the goal. Each day, just shoot for the goal. Don't worry about what happened the day before. Don't try to make up for it, because there will be those days that you'll actually make more than your goal, and you're looking for a weekly average. And that will actually start happening as you can be consistent in your trading. Look at Forex Factory. Look at when the news is coming out on the red factories that you might be interested in trading. That'll tell you when the news is coming out on certain pairs. Some days of the week, the Australian pairs move quite nicely. Other days they don't, because there wasn't any news on those. The yen pairs will actually move the same way. If there's yen news, they'll move. Sometimes you'll find that the pound pairs or the euro pairs, that there's groupings of pairs that are moving based on what the news is. So find out when the news is coming out based on Forex Factory is another way to do it. And then look in the trade basics for the other things that Michael talked about. What about the stop loss? What is the best rate of return? I tried to figure out if I'm going to set a stop of, say, 30 pips, I'm looking for the potential for that trade to go 30 pips. So at least minimum 1-to-1. There are other ways to kind of pick targets, but that's a whole different topics. And so if you figure out, well, that swing low was out 18 pips, so I'm going to set a target of 18 pips, but I think it'll probably go 25 to 30. So you might set your take profit at 30, but manage it and watch it so that if it hesitates at any point, you just close a trade. What if it only got 12? Take the trade, take the profit, take the pips. And don't get caught up in that it has to be exactly what you determined. Let the market tell you whether it's going to go any further, and then get out or stay in.
Never follow another person into a trade, as their particular trading plan and eyes are different than yours are. Andre is saying, can we use just 2 charts? For example, use the 5-minute and the 30-minute as your direction, your directional biggest time frame and smallest time frame.
You can do whatever works for you. I don't like using the 5-minute. It's too noisy. It doesn't give me as many pips. Oh yeah, you can get more trades, but generally if I can be more relaxed and get more pips if I use those larger time frames, but that's personal preference again. Through my personal experience and listening to other successful traders, they all move out of the smaller time frames. As soon as they get to the bigger time frames, that's when they start making more money. So my suggestion is never use anything smaller than a 15 minute as your entry signal.
After entering a trade, is it best to manage it on a smaller time frame or a larger time frame?
For this little strategy, I would say until you know more, just manage it on the same time frame you entered it on. There are ways to move it up to manage it on larger time frames, but if you don't know what a 5-alarm trade is, then you won't know how to do that anyway. That's an nth degree principle. Sometimes you enter on the 30-minute, and you can move it up to the 4-hour to manage it, but there's a point where you start moving it back down to the 1 hour, back to the 30-minute to close. There's a whole sequence there of how to manage the trade. Just if it looks like it's going to change, get out. If the signals if you look at the material, look what the exit signals are in Launchpad and or nth degree. The exit signals are the same. Find out which exit signal works for you and use that same exit signal every time.
There are many times that the Euro US is moving 5 pips an hour for 5, 6, 7 hours, and there are other times that it's moving 20 pips, whereas the pound New Zealand might be moving 60 pips for 4 hours in a row, 60 pips for the next 4 hours. You might find that the volatility of the higher pairs are kind of scary for you, especially if they start going against you, and at the lower time frames. And so Kirk is dead right. You've got to find a strategy and a safety zone that is comfortable for you.